Today we're discussing finance, banking, and economics with our good friend Wotsomu Wanda, an economic consultant. And today our focus has been on the controversy surrounding a bank known as Silicon Valley Bank, which essentially collapsed over the course of the last few days. Why? Because there was a bank run, literally. Due to the fact that there were imbalances between the assets and liabilities, and the story leaked within a short cycle, much of the cash got taken out, and now the bank had no money to service their other clients, which essentially means the bank has to close. And so that's been a very interesting development. Now, even more interesting is the fact that this bank was a hub for It was a funnel for investment between a funnel for investment capital between the investors and the tech startups.
Yes.
Many tech startups had their finances attached to this bank, meaning that many of them are going to face a problem. And that's what we want to discuss in this part of the conversation. Once again, Wotsomu, welcome to the Fatboy Show.
Thank you again.
So earlier you helped us understand what led to the collapse of this bank. And let us know, maybe you can help us understand what this might mean for the tech sector in general. At this point, I don't know exactly which specific tech companies are directly impacted by this, but I've seen a general sense that there were a lot of companies that were having to do with the environmental causes and social causes. I was seeing that a lot of such tech companies were being impacted. Now, I don't know if the scope extends beyond that, but maybe you can.
A great deal beyond that. I think within the tech and some of the brightest minds who had shifted, they had somehow had an arrangement and an alignment of funding and brilliant minds kind of working together. From the time there has been this particular change in interest rates, I think that's the core to the whole problem, and it's what it actually is affecting the business cycle for that matter. Yeah, when this had started happening last year, early last year, we noticed at the same time what was happening within the tech industry. There was a general malaise. And within the talking heads tech, that's David Sachs I'm talking of, who's really aligned to Elon Musk. When you hear guys of that nature, they really were so obsessed with the fact that all tech companies are going into a new world and they should refocus their funding. First of all, many of them started focusing on generating cash. So they were getting out of whatever assets they hold that are long-term. I think they sold a lot of Bitcoin. Many of them, they sold and their equity, and they sold to kind of hold cash. And their advice, if you listen to many of them, was to focus on holding cash, reduce on their burn rate, whatever you're spending within a given period of time on salaries and things of that nature, reduce.
Yeah, we saw a lot of we saw many tech companies enact drastic downsizing measures.
Exactly.
Twitter being one of the first examples, where almost 75% of the staff were axed.
They have been to this, and people missed that particular idea. Was Elon Musk. Of course, he's controversial and whatever, but he's extremely brilliant and was at the center of the whole process.
Okay.
When he entered Twitter, initially, when this started changing, he tried to withdraw from acquiring Twitter. There was a heavy process until he had to be sued to take it over.
To buy it.
Exactly. But when he ultimately did, he went on a drastic cost-cutting process.
Yeah.
He got rid of more than you're talking of more than half the stuff. That was overnight. He did not even wait for it to be such that what he would try to generate was to generate a more efficient entity that would function with the most minimum hardcore working group to be able to survive. And then he went into the process. He himself got rid of a lot of his shares to generate cash. He got rid of almost all his holdings of Bitcoin. I think anyone who could sit back and get rid of their emotional reactions to would have studied Elon Musk and understood what was going on within the tech industry across the board.
It seems like out of all of them, he was the first one who was trying to run it like an actual business.
Exactly.
Yeah.
But
as in, looking at the profit and loss, am I making money? Am I spending too much? Everyone else just seemed to be in a rapid expansion drive. And at least on Facebook's part, it wasn't until I think investors began pressuring him to just ditch the whole metaverse thing. But otherwise, he seemed happy to go with his dream and his vision for that. And maybe it required some sober minds to start asking tough questions about actual, the counting the dollars and the pennies, and eventually drastic action had to be taken. We saw Microsoft reduce staff.
They've all been going through the
Facebook,
similar process
Twitter.
now.
I don't know about Apple, but so that said, Elon Musk and these measures that he took, was it with the understanding that Twitter would now have to rely on revenue generation vis-a-vis investments?
Yeah, exactly. He was going to make drastic changes. He has huge hopes for Twitter. And for people who have really studied how he focuses and drives his businesses, people believe it will become one day a $1 trillion company. Of course, if it survives all this. But what he needed at the moment was its survival over a period. Many of them are indicating mid-2025.
Okay.
Mid-2025. When you listen to them, that's the period they are indicating. So generate cash enough to drive you through this period that they believe is going to get worse till, say, mid-2025. Now, what has happened, especially like now for Silicon
Valley Bank,
is that a lot of the tech industry deposits dropped again drastically because of the general slowdown within the industry, given the rise in interest rates. So many of them were not getting the kind of loans that we had access to. I mean, they had become too expensive. Now, with expensive loans, they were cutting back on what they really needed to spend on. And most of the spend within the tech, for growth companies for that matter, is research and development.
Yes.
But especially with new workers who are seen as either brilliant to develop that particular work that they require. And so when they were cutting down drastically on workforce, like Twitter was doing, and then on research and development and a combination of all these, they were now drop in deposits to this particular company as well, to this bank.
Oh, okay.
Across the board, there's been a drastic drop in deposits. So a combination of falling deposits and then a fall in and then that mismatch within its long-term investments and then what their clients really required has been generating a lot of problems within the tech industry. And now what you indicate is a general slowdown in tech industry going forward. This is basically recognized and acknowledged. And so for the next year or two, there is going to be that particular slowdown. How that affects tech, of course it will affect the rest of the world for that matter, because this is one of the few banks that was allowed access within China to fund similar tech-related investments.
Sure.
It's one of the
Are there any companies that you could point to that?
Within China, not yet, but I know it's one of the few that have been allowed within China, and it had partnerships going in, and yes, within China.
Okay, so as far as you know, which tech companies are at the moment directly impacted by the closure of Silicon Valley Bank?
Now, there was going to be a general malaise within the tech industry. Actually, the whole weekend was horrible for them. When you listen to what they were going through, it was horrible. The intervention by the federal government, for that matter, and the Treasury and the Fed has kind of lighted the spirits, because what they were terrified of is the failure accessing the accounts, and mostly operational accounts, payroll accounts. This would have been drastic if it had been allowed to go on, and it could have led to a cascade of general systemic collapse.
Okay, so for now, we can rest assured that that's not going to happen.
No,
These companies who had accounts there are going to be able to access those funds to operate their companies.
Yes, because the intervention was again drastic in its own way. One, there were, first of all, only $250,000 was insured and was probably seen as
per depositor.
Many of them held 10 million and the rest. Now, the intervention was such that they are allowing access to all. They are not limiting. They've removed the limit. This was interesting.
Okay.
And that being the case, the biggest problem now within the US is political. And of course, left wing, right wing, kind of because
Everyone's looking to point fingers.
exactly.
Yeah.
Now they feel, of course, tech industry being what it has been and being the bright minds they've been and being with access to all this credit and investments and becoming billionaires or multimillionaires have been seen as the successful cohort in the last 15 years or so.
So how is this different? A normal person might say, it seems like yet another layer of elites are being protected from their
Exactly.
financial indiscipline. Whereas previously it may have been the mortgage or housing sector or whatever. Today, now it's the tech sector. And meanwhile, ordinary working class people have suffered drastic consequences due to, for whatever other reason, and they've not really had the government to bail them out or help them out. So some people might view this once again as the government sort of protecting the rich. And speaking of politics, I'm sure this is going to be a big political issue in contention in the next campaign cycle.
You capture it quite very well, in that the split within the left-right is specific on that issue. But the intervention by government was also interesting in its own way. It focused on protecting deposits. So deposits are protected almost
rather than the shareholders
across the board.
Okay.
So whoever shareholder equity, for that matter, they are going to ban and will lose. They are willing to let them ban and lose.
So politically it can work. You can say we intervened in order to help the workers, because if
salaries,
if we're not for that, then people would have not been paid. And I think that's a compelling counter argument to make.
It's exactly the argument they are deploying at the moment.
So what about the issue of I was seeing there were questions about, and of course as people on the right wing politicize this, have been making fun of some of the policies of the Silicon Valley Bank that now is coming to light. They were a very they're very progressive and very pro social justice. So in one screenshot I saw that captured a statement from the head of financial risk management and model risk at Silicon Valley Bank, UK Limited, some lady called J.S. Ersapa. She says, the phrase you can't be what you can't see resonates with me. As a queer person of color and first-generation immigrant from a working-class background, therefore, were not many role models for me to see growing up. I feel privileged to co-chair the LGBTQ plus ERG and help spread awareness of lived queer experiences, partner with charitable organizations, and above all, create a sense of community for LGBTQ plus employees and allies. Now, people are seizing on this and saying, you see, if instead you are focusing on running your bank, instead of dwelling on this LGBT, this minority stuff, then maybe the bank may not have collapsed. So what do you say to that? Or is that just the usual political circus?
Yes, those are the usual political and distractions to the central issues. And they are kind of becoming central themselves rather than the real technical and problematic and probably real threats to the economy that would have arisen if this was ignored, because I think there were people, so many willing to let this ban. Whatever the case, let it ban. Is capitalism anyway.
Yeah.
If you take risks and you suffer the consequences, good. If you take risks and make gains along the way, that's also acceptable. But ultimately, I think if some things become systematic, society has to survive. So, we cannot be so brutally. We cannot be so brutish in approach on everything. That sometimes when you need to relent a little to allow for a bigger gain for the society, ultimately.
So surely there will be other banks impacted.
Oh yeah, already two others had collapsed. There's Silvergate and there was Silvergate. The other kind of escapes my mind, but there are two that had followed. But the intervention, the way it was structured, kind of allows for the rest to participate.
Okay.
And so they saw it as a general problem that may arise. And then they kind of opened the intervention, the regulatory intervention, to allow for that particular backstop so that we don't have it become systematic and transfer to the rest of the economy. So
all right.
Yeah, that kind of protects the rest of the economy. But I think what is drastic, or what is more important going forward, is how the Fed is going to handle its credit and especially liquidity within the economy. Because of the problems they saw with inflation, which is still kind of high, and is still supply side, they may now need to relent a little as far as interest rates are rising going forward,
Mm-hmm.
because many people were targeting mid 6% going forward, and that would be an extra 1.25 or thereabouts,
Mm-hmm.
which would again create greater and greater pressure on credit part of the of businesses, because businesses that survive on credit will ultimately, we are facing greater and greater and greater pressure. That mismatch within the balance sheet was getting more and more drastic. What some are indicating that that there should be immediate go-to-market information about the mismatch, because when you have a 10-year bonds, you are only going to realize the loss on selling. So if you're holding on for the 10 years, you may not realize the loss because you'll get your $100 face value. But if you are faced with liquidity problems and you need to go now, which is always often an emergency anyway, that's when you really, really suffer the consequences. So many believe that particular accounting, if law for that matter, that allows the end of what term valuation may be adjusted to follow the market. That when there is particular market related changes within that your face value of the bond, it should be reflected in your balance sheet immediately. Even if
And
you're
what would
not going
that
to
do?
market.
What would that do? Would that serve to allay any concerns from investors or depositors, or what is it intended to accomplish?
Oh, for most people, then for anyone investing long term, would wake up not to utilize short term resources.
Ah, okay.
You would match long-term liabilities and long-term assets.
That's a hard one because look, if
Yes.
an opportunity presents itself and there is a bond, there are bonds available that you can invest in.
Yes.
I think,
And
and
they're
if
the
the if
safest.
and they're the safest, and if the price is attractive, I think a lot of people are going to fail to resist the temptation and be willing to incur those potential risks that you highlight. But
Yes.
wow, this is where it gets really, really deep, and I'm glad we have Mr. Wotsomu Wanda here to help us explain it. Well, when we get back, I want to look at the impact of this on the Ugandan economy, and also we're going to have a conversation about the banking in Uganda in general, in light of recent scandals that we've been seeing. You, as a depositor in a Ugandan bank, should you be feeling safe? That's coming up next on the Fatboy Show.